Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's keep going with our gold market analysis. So despite the significant volatility recently on other markets such as the stocks market in particular, on the treasuries market as well, as you can see on the gold market it's relatively calm session, so quiet session. And that is probably could be treated as a positive sign. It's just because if you'll take a look, for example, on the interest rates, you could see the significant retracement here, which is mostly supportive for a gold market. As you can see, the pullback from the next target of the butterfly that we have discussed previously and keep going on interest rates performance. That's definitely should provide some support to the gold market in the nearest term. At the same time, we could say that gold market mostly stands sensitive to real interest rates. Nominal interest rates are also important, it's just because they are parts of the real interest rates. But the real interest rates, the difference between the nominal rate and inflation has better value, and in fact gold market reacts strongly on the real interest rate. So if, for example, you will compare the gold market, this is a bit longer term chart, but if you compare the long-term performance of the real interest rates and the gold market, you can see that relation stands very tight. So, and currently, as you can see, that real interest rates are coming higher, which is potentially, well, could start act in some perspective as a holding factor, as a headwind for the gold market. But at this moment, right now, with the drop of nominal interest rates, we could see that, well, reaction hasn't happened yet on the gold market. So anyway, currently what we could say on the daily chart, market mostly stands at the same area as we have discussed. We do not see really big pullbacks, which is good, and actually stands, supports the overall market mechanics in the current stage, because here market stands in extension mode as we have discussed recently, and on this stage we should not get any deep retracements because deep retracement already has happened right here. Market just should keep going higher to the next destination point. We have multiple targets in this area as we discussed, but the big achievement for the gold is that actually, or big advantage is that it has no significant fib levels in this area. Till this top around 1920, it has no fib levels. Yes, we have extensions, we have over but around 1860, but no additional fib levels. That should make the upper process action a bit easier for the gold market. So, in fact, currently we could discuss only the same retracement that we talked about recently. Let's take a look on the 4 time frame chart. Market is still quoting around same 127 extension of the 1844. We have suggested some upward action recently, it has happened, but at the same time we have to acknowledge that the 1852, the target of the head and shoulders here, is actually stands very close, has not been completed precisely, so market wasn't able to reach it totally. And mostly we could say that it's going around the same area. So just some retracement, some reaction on this level probably will be a bit more extended. So we'll take a look at the hourly chart. Now it is obvious that we could recognize the head and shoulders shape here. As we said, the 1830 area is very important, and that makes us think that the first destination point or possible retracement should be around 1830. So retesting of the major level that has been broken. At the same time, you could see that market creates the agreement support around this area. So this is first of all 30% support of the small stressing upward action. And also it will be agreement if market will start forming some A, B, C, D pattern, completion the OP of the minor hand and shoulders pattern that is forming here. Currently, within the few minutes, we probably could get the bearish grubber right on top. So you can see here is the crossing of the MACD lines. So that's why in the current circumstances, if you would like to buy gold, it makes sense to wait a bit and see what will happen with the hand and shoulders. Once you will see occasionally clear signs of the failure, For instance, if market will start to keep going lower, here starts to keep going lower and stops suddenly and start turning up and taking out of the shoulder, that will be the clear signs of the failure. It means that market is ready to go higher, and in that case we keep going to 1852. It's next target that might be achieved. If everything will be as it should be, traditionally with the hand and shoulders, it means that market has to complete the OP target and reach the 1830. That will be another scenario that you could keep an eye on. And then once market will appear around this area, you could think about taking the long position depending on how market will drop there. Well, we should avoid any thrusting black nasty candle to the downside. If we will get it, of course, do not consider taking the long position immediately. Wait for more bullish signs. If retracement in general will be relatively gradual, that should be relatively safe opportunity for taking position, as the pullback here should happen, and that will provide you a chance to move stops to the break-even. So that's actually the only thing that we could discuss in the gold market right now. Let's see what will happen with the second short expansion, and especially what will happen after the reaching of the 1830 area.